the co-founder of the massive cryptocurrency exchange Huobi, went on air with CNBC recently and made some pretty solid claims. His theory on the cyclical nature of Bitcoin and confidence in a future Bitcoin bull run are educated points that any investor should be aware of. Guys, thanks for tuning back into Profit Protection. On our channel, we're striving to bring you the most relevant and intriguing news from around the web. We gather and analyze the best ideas coming from the thought leaders across the finance, crypto, and digital asset markets. We hope to be a resource for you as you research and further protect your own profits. The best way to support us is to like and subscribe so we can continue to produce high-quality content for everyone. That being said, let's get right to it. Du Jun is the co-founder of cryptocurrency exchange Huobi, which is the 6th largest exchange in the world by volume. He joined CNBC's Arjun Kapal live on air to discuss the future plans for his exchange, as well as his thoughts on the future of crypto. Du Jun and his partner Leon Lee founded Huobi in 2013, and within the same year began to operate as an exchange for Bitcoin. By November of 2016, the exchange was pulling in roughly 60% of all crypto exchange globally. It was hyper successful, with trillions of Chinese yuan being transacted on their platform. Over the following years, Huobi would expand to other nations such as South Korea, Japan, and the United States. This was initially due to new regulations from the Chinese government, but they soon realized the opportunities that other countries presented. Huobi finally closed its door on Chinese business when the government officially cracked down on all Bitcoin trading or mining in 2021. Du Jun is still very positive about the future of Bitcoin and crypto in general. In fact, he is expecting another bull run in the coming years. Let's roll the clip to see exactly what his theory is.
In crypto, there is a cycle or a curse every 4 years, and this echoes with halving in Bitcoin. In 2012, half Bitcoin was released into circulation, and in 2013, there was a bull market when the value rose from 20 USD to almost 2,000 USD in 2013. It was a bear market after that. Then, 2016 halving led to the second bull market in October 2017, when Bitcoin valued at almost $20,000. In 2020, the third halving led to the third bear market in 2021, which rose the price of Bitcoin from around 3,000 USD to 70,000 USD. If this cycle continues, we are now at the early stage of a bear market. It is really hard to predict exactly because there are so many factors which can affect market as well, such as geopolitical issues, including war, or recent COVID-19, also affecting the market. Following this cycle, it will be until end of 2024 to the beginning of 2025 that we can welcome the next bull market on Bitcoin.
Du Jun points out that there is an obvious cycle to the Bitcoin bull market. This catalyst that he's referring to is called the halving. The halving is an integral process to the growth of Bitcoin. This happens more or less every 4 years. The name sort of speaks for itself. During this event, the amount of Bitcoin that can be mined at once is cut in half. This means that for the same amount of computing power that a Bitcoin miner uses to mine Bitcoin blocks, they will be rewarded with half as much cryptocurrency as before. In theory, if you decrease the supply of Bitcoin being put out into the world without decreasing the demand, prices should rise. This is great for anyone who already holds coins. Despite how logical this seems, there's still some debate about whether this is a rule investors can depend on. Regardless, you can depend on one thing. When the so-called halving comes around, there will be hype, and plenty of it. Excitement around such a rare event has always driven Bitcoin up in value. This is one reason it is impossible to tell if the mathematics are helping drive the price up. Too many people hop on board around when Bitcoin mining is halved, and it's certainly their influence and buying power that causes the surge in price. This schedule of halving will continue until the number of Bitcoins in circulation reaches 21 million. This is not expected to happen during our lifetimes, but likely sometime after the year 2100. Until then, we have quite a few more halving cycles to go through. To give you some background knowledge, the last 2 times Bitcoin mining rewards were halved, the price rose by 284% and 559% respectively. These occurred in 2016 and 2020. So, Does this mean that there's easy money to be made when 2024 comes around? The answer is not quite. As it turns out, you and every other crypto investor is wondering the same thing. Pick a date or an event and there's guaranteed to be plenty of people with sweaty palms, panicking, and trying to figure out what the perfect time to buy is. The simple and straightforward answer is that no one truly knows. The price of Bitcoin is wholly dependent on how much people are willing to pay for it. Regardless of the reward miners are getting or the amounts of Bitcoin being put into circulation each day, the price is a reflection of the investors. If you've been around our profit protection channel lately, the advice we have for you might sound a little familiar. In our video about how you can copy Michael Saylor's Bitcoin investment strategy to maximize gains, the first point in his strategy that we covered is being prepared to hold your coins for the long term. By the way, we strongly recommend checking out that video. It's a great breakdown on Bitcoin investing for anyone interested in dialing in a good crypto strategy. Michael Saylor is a big name in the crypto space, and he has a lot of success to back up his name. Back to the main point. Regardless of when or if the next Bitcoin run-up comes, you won't profit off it unless you are able to hold onto your crypto with diamond hands. This is partly due to the volatility of Bitcoin prices. The only way you will still be in the market to profit off the next bull run is by stashing that crypto away and waiting with religious discipline for the next price jump. People who attempt to time the market are subject to confirmation bias, massive FOMO, and emotional decisions. If you are watching the charts every day for your sign to buy, you're going to have a rough time. Unless you time your buy perfectly, one of two things will happen. You will buy early and sell the next big drop to cut your losses, or you will miss the train as it speeds past the station. The way to avoid this is to buy Bitcoin for the long term. Don't purchase crypto expecting to get rich quick. Don't even purchase crypto expecting to make money in the same year. Seasoned crypto holders know that patience is a virtue. Going long and hitting it big with Bitcoin is going to require that you check the following 3 boxes. Number 1, not investing money you need. In our other video, analyzing why Michael Saylor believes crypto is better than property, he put it best, saying, if you're going to buy any long-dated asset, but especially if you're going to buy property, and if you're going to buy Bitcoin, if you wouldn't hold it for a decade, you shouldn't hold it for 10 minutes. In other words, you need to buy Bitcoin for a reason and stick with it. No one can be sure exactly when Bitcoin will pop off again, so you need to be prepared to hold it for 5, possibly even 10 years. Number 2, having emotional willpower. Part of why investors can successfully hold Bitcoin for such long stretches of time is their emotional willpower. Being in control of your emotional state while watching the market is the key to profit. Cryptocurrency is very volatile and is not due to any integral part of the system. The volatility comes from the emotional turbulence that investors aren't able to handle. People constantly buy and sell Bitcoin in an attempt to get quick profits or save their money. This unfortunately only causes losses over the long term because you can't always be ahead of the crowd. Those who will be the richest Bitcoin holders undoubtedly are long-term holders, not daily, weekly, or monthly traders. Number 3, doing your due diligence. Due diligence is defined by the Oxford Dictionary as a comprehensive appraisal of a business undertaken by a prospective buyer, especially to establish its assets and liabilities and evaluate its commercial potential. So, you might not be buying a business, but you are making an important investment. Your due diligence is required to trust your own decision later on down the line. Research and education are a necessity for anyone attempting to hold Bitcoin into the next big jump. Otherwise, you won't understand the forces at work or the principles that drive the growth of a cryptocurrency. This is as important as the first 2 steps. When you've done your homework and are confident in your long-term strategy, you can stick to your guns and still be holding coins when the bull market rears its head. Everyone, once again, we want to express our thanks for your views. Profit protection is not financial advice, it's purely a resource for learning about the emerging markets and ever-changing monetary world that we inhabit. The ideas from thought leaders across financial, crypto, and digital asset spaces online are valuable and worth breaking down. Du John is a highly intelligent investor and businessman. His work with Huobi showcases his knowledge of global markets and digital assets. While no one knows for sure exactly when Bitcoin will halve next or how the price will react, it's important to understand the principles behind it. We hope these tips will help you to be calculated in your decision making. Please like and subscribe so that we can continue to bring you content to both entertain and educate you. Invest safe and invest smart. Happy researching. See you next time.